Are we standing at the brink of a housing market transformation? The latest housing market report indicates both promise and uncertainty for those in the market to buy or sell a home. Here's what you need to know. First, let's talk about the surge in housing supply. The number of homes for sale has
spiked by a substantial
20% compared to this time last year. This influx signals a shift
towards a more balanced market,
which could greatly benefit potential buyers. A more balanced market means less competition and could help ease the relentless rise in home prices
we've seen recently.
For sellers, this means adjusting strategies to stay competitive, especially if this trend continues. Moving on to demand and sales, there has been a slight but noticeable uptick in home sales this July, breaking a 4-month streak of declining sales. This suggests that buyers are
slowly coming back into
the market, likely due to improving affordability. However,
it's important to note that
from force there is encouraged side. While sales are picking up, the overall demand remains somewhat tepid.
This could potentially temper
price growth in the coming months,
offering some relief to buyers feeling the pinch of rising prices. Now, let's talk about the elephant in the room: rising prices. The housing market continues
its upward march, with home prices climbing for 13 consecutive months now, showing strong resilience despite broader economic uncertainties. This consistent rise reflects the tight balance between supply and demand. However, with more homes hitting the market, and if buyer interest doesn't keep pace, we might see a cooling effect on these price hikes. For now, sellers are in a strong position, and buyers might find themselves in competitive bidding situations, particularly for homes in desirable locations. Lastly, let's consider the potential for lower mortgage rates. With the Federal Reserve hinting at possible interest rate cuts, we could see mortgage rates drop, making home buying more affordable. Lower rates not only help first-time buyers enter the market, but also allow existing homeowners to consider upgrading or refinancing. However, this also has the potential to drive prices even higher if the demand spikes in response to cheaper borrowing costs. In conclusion, the housing market seems to be on the brink of a transformation. The increase in housing supply and the potential for lower mortgage rates can greatly impact the market, offering opportunities for both buyers and sellers. It's essential to keep a close eye on these trends and adjust strategies accordingly in this evolving market landscape. Now let's delve into the topic of refinancing. We are currently experiencing an astounding 120% increase in refinance applications. Many homeowners, especially those with higher interest rates from past years, are taking advantage of the current lower rates. This surge in refinancing is injecting fresh liquidity into the economy as homeowners free up cash for spending. However, there's a downside to this situation: more debt. As homeowners take on larger mortgages through refinancing, it could potentially raise concerns about the stability of the housing market in the event of economic downturns. Moving on to the impact of the Federal Reserve. Their role in all of this is incredibly significant. The mere discussion of interest rate cuts has already had an influence on market behavior, and any actual cuts could further reshape the housing market landscape. If rates drop, we could see a surge in buying activity, but with more buyers comes the potential for even more competitive markets and rising prices, especially if the supply doesn't keep up. So, what are the economic implications of all this? On one hand, increased refinancing could potentially boost consumer spending, which is good for overall economic growth. On the other hand, the combination of rising home prices and increased debt levels could potentially strain affordability and even lead to a cooling of the market if economic conditions change. Looking ahead, the housing market is at a critical juncture. The interplay between supply, demand, and interest rates will determine the future trajectory. If supply continues to increase and interest rates drop, we could possibly see a more balanced market that favors buyers. However, if demand surges in response to lower mortgage rates
and supply doesn't keep pace,
we could be in for
even higher prices and more competitive markets.
Whether you're buying,
selling, or simply observing from the sidelines, the housing market is something
to keep a close eye on.
The decisions made by the Federal Reserve
in the coming
Months will likely have far-reaching
consequences,
not just for the housing market.
but for the economy. As a whole, it's definitely a
Situation to stay tuned into.
as we navigate this ever-evolving landscape.